So, Travis kind of gave an introduction of himself and what he does. So, Eddie, why don't we just move to you, and then we'll go to Craig. Just a little bit about yourself, your background, what you do, your business,
Yes, sir.
and then we'll kind of circle back around some of those same topics that maybe Travis touched on. But just kind of tell us about yourself.
My name is Eddie Garcia. I'm the 6th generation cattle rancher. I live in San Isidro, Texas, and 10 years ago I was afforded the opportunity to purchase the cattle auction in Alice. So I have an extensive history in the cattle business. I've been able to, in all sectors. I've had cattle in the feedlot. We have cattle turned out. But I've been able to learn a lot through the auction barn process, because you interact with so many people on a daily basis, and you get so many opinions, and you get so many perspectives, and you get so many things coming at you. Like I told Sam earlier, it's the same business every day, but it's just always different. You never know what they're gonna bring you, or who's gonna come, or what people's thoughts or intentions may be. There's quite a few aspects to it, that I think, of course, auctioning cattle off in an auction barn method, to me, is the best way to auction cattle. Right now, you can probably get a direct price from people out when we call like country sales, and right now, some of the auction barn prices are beating that, or a lot more competitive than that. So I think at the end of the day, selling your cattle in a competitive auction setting is the way to go. But I'll let you say something if you want to. I'll just keep it brief.
What if I don't want to?
I can just keep going.
Travis?
Go ahead, Evan.
Well, my name's Craig Elkins. Born in the Valley, like everybody else, left, came back. I've been back since '84 and have been in the grain business since then. Was in it prior to that, but in other places. I'm headquartered out in McCook. I'm running an operation in Progresso now. The biggest challenge that we have is farmer education. For whatever reason, farmers in the valley have been very reluctant to get into futures, and that's where farmers need to go. The grain elevator is, according to Texas Department of Agriculture, the bad guy in the bunch. To be an elevator, you have to be licensed, you have to be bonded, because they think we're going to rip the farmer off. And that's not our goal, because without the farmer, we don't exist. When farmers have bad crops, they've got crop insurance. They have ECAP. There's all sorts of USDA disaster programs that come out and have a safety net for farmers. Grain elevators and cotton gins, we're the red-headed stepchild somewhere underneath the stairs, because, well, you're a business. And if there's a disaster that affects your customer base, we feel for you, but that's about all that we get as a, how shall we say, other than regulation, that's the amount of government interference that we have. It's a challenge to look and see what's coming down the road price-wise. Milo is not going to be pretty this year. And it is going to be an uphill battle for a lot of people.
Are you talking about price-wise or moving it?
Both. The question is, in 1984, there were probably, if I did my math right not too long ago, there were 24 different grain elevators in the Rio Grande Valley.
Right.
Today, and in that 24 different elevators, there are probably 20 different owners. There were a few people who had multiple facilities, but for the most part, elevators were standalone. Today, there are at most 10 owner-operators and 12 facilities that are operational. At harvest, where's it going to go?
That's my question. Where are we gonna put it all?
You know, where's it going to go? And as an elevator, we've every year, in May, there's a South Texas Country Elevator Association meeting, which covers every elevator from El Campo, to Orange Grove, to Rio Grande City, to Brownsville. That's pretty much where everybody comes from. And everybody says the same question: where's the Valley's crop going to go? How much storage space is available? And somehow we make it work because there's typically a market. We can push through ADM. This year, there isn't a market in Corpus, which means the Corpus crop, where's it going to go? Everybody is thinking it's going to come to the Valley. If it comes to the Valley, that means it's going to Progreso. Storage space in Progreso is very limited, and those, me included, that are operating facilities down there, we want to run product through the house. That's what we're geared for down there. We're not geared to let a farmer bring something in and wait 90 days before they decide to sell it. And so some tough decisions are going to have to be made by those of us down there as to whether we're going to allow storage and how much storage. How much are we going to allot to storage? And how much are we going to use as ours? Any farmer who puts grain in a grain elevator for storage, well, first, there's two types of licenses. There's a state license and a federal license. And I'd say it's about a 50-50 mix. Viterra is federal. I think Willamar is fed.
We're state right now.
No, you're state right now. Well, in that case, Viterra is the only federal one that's out there. Mm-hmm. And so now there's also the big question of, is Viterra going to run its other facilities? No one knows the answer to that. But if a farmer is going to store it, get a warehouse receipt. And the reason I say get a warehouse receipt is because that gives you a priority claim in case the elevator does something bad. If you've got a warehouse receipt, then you are now in the secured creditor type category, as opposed to just being someone who delivered grain and it's stored there. It's also something you can give your lender and say, yes, I've got my product stored over there. I'm not going to pay on my crop note now, and Travis might address this, is, here, I've got warehouse receipts, and maybe the lender will give some grace on note payments. But from a protection standpoint, if you're going to store grain, get a warehouse receipt.
Good advice.
Yeah, well, unlike the grain markets right now, as most of you know, the cattle markets are really, really exponentially about as best as they've ever been. In my 10-year career, this is the best prices that we've ever had. We had that same run up in 14 and into 15 when we took over. We saw the prices come down a bit, and that's kind of be the biggest question on everybody's mind right now. People are getting back and retaining heifers. People are investing in heifers, investing in cows at an all-time high because their return on the calves is at an all-time high. And so those are some of the challenges right now. People come to the barn, they want to take advantage of it, they want to get into the market, but buying into the market, I'm sure when you're trying to lend people, the input cost just on getting back into the market ran out to produce, and that's what took out a lot of people, about 10 years ago, and that's what's really hard on a lot of people that are turning calves out and stuff. And they talked about LRPs, and they talked about different ways to insure yourself, and those things need to be addressed. I don't think it's going to be as quick as a turnaround as far as, I think the prices are going to stay fundamentally. I mean, there is things that in the business that are called black swan events, where things that come in and knock us off our perch for things that we couldn't control. A lot of those are political. A lot of those have to deal with external factors that we can't deal with. The thing that's on my radar right now, and a lot of you probably have already heard, is about that screwworm that's in Mexico. That's one thing that is making our cattle prices higher, because they're not letting the Mexican cattle in. So those cattle have to be sourced somewhere, you know what I mean? So those things that you have to think about. And I also think that it's just the numbers of producers. Like he was just made a point about less grain elevators being around, and I'm sure if there's less grain elevators being around, there's far less farmers. I heard some stat of the cotton production was drastically less this year than it had been. The same holds true, I believe, in the cattle sector, because I have a database of all the producers that sell cattle with me, and every year I can probably count 6 to 7 to 8, 10 herd sellouts. And while the sale barns say, oh, we're having a herd sellout, we're getting 50 cows this week, never ever celebrate a herd sellout, because the odds of them coming back are very small. And a lot of times that producer has gotten to an age or to a situation where I'm not gonna get my butt kicked by having to fight the droughts, and I'm just done with it. And a lot of these high prices will attract people to sell their herds out. I see that along with another stat as far as retaining heifers. The feedlot numbers have to be below, I believe it's 32% of the total fed animals that are killed, has to be below 32 to 33% for over a year for this thing to kind of kick back over and for the heifers to start to produce calves. But if you keep a heifer in 25, you can't breed her till 2026, she won't calve till 27, and you're gonna sell that calf in 28. So I think there's far less numbers, we understand that, but you just need to be aware of some of the challenges in that regard, because they are real. And I don't know how that might relate to you, well, when you're lending money versus I want to buy a $2,200 cow tomorrow at the sale barn,
Yeah.
versus I could have paid $800 for
A few years
a
back.
few years ago. you know what I
Right,
mean?
right. Well, I'll address Greg's point first, the warehouse receipts, and that's a good idea. And it does sound to me like this year we're probably gonna have grain in storage, right? And how would a lender approach that with his customer and borrower? Every situation's different and unique, and just know that. But in general, I would think that you would, the lender would try to work with the farmer. He could take those warehouse receipts, hopefully, and probably use a discounted value, you know, looking at the market, and with a plan, an exit plan. You know, how long are we gonna store it, kind of to his point, how long can you store it? You wanna calculate those storage costs, you know, because there is a point of no return, holding that stuff if you don't market it. And they could work with you like that, you know, on holding that grain, you know, until the market changed or you found a buyer or something like that. But to his point, it's always good, if you're gonna hold grain in storage, have the elevator issue your receipt. It's not that big a deal, honestly.
Well,
I don't think,
No,
you know, and he should.
Good business practice.
Just
Yeah,
a
I
good
mean,
business record.
it's, most of us are
What's
on
that?
electronic receipts. Most of us on electronic receipts. You know, it takes, in 5 minutes, I can do an electronic receipt.
Yeah.
And since they're electronic,
Are y'all still paper?
well,
No,
you,
we
you,
upgraded.
well, you take a lender can, and the electronic receipts people are regulated. Lender you put the lender in contact with, the electronic receipt people. They register with them, and it's push 2 buttons, and the elevator transmits the warehouse receipt into the bank's account. And now the bank controls it. And when it's time to cancel the warehouse receipt, the bank takes 2 clicks and releases it back to the elevator, and the elevator cancels it. I mean, it's
doable.
It's
It's a little bit different than when I first started out.
oh yeah, when you write him, you got 4 copies, can you read the 4th copy when the inspector comes?
Issue a collateral warehouse receipt, you know. all that
Yeah,
kind of stuff.
but, and if you are storing, I mean, there's multiple ways you can contract grain. And yes, I mean, you can, well, you can sell it cash across the scale. And if you're of the opinion that market's gonna go up, then you buy calls. Or you just go long, you buy futures. You protect any upside advantage that you think may be coming with futures, but you cut off the interest to the bank, you cut off the storage charges, because if you just put it in storage and let it sit there, you're in essence short Chicago. And you have no protection.
You gotta have an exit plan.
Yeah, I mean, you're long cash, and you're long cash, and so if the market falls, you're dead. Now, I wish either Chris or John were here about what they called HTAs or hedge to arrive contracts. From my experience, those things are a nightmare for the elevator, because it is, all one is doing is creating the opportunity for a fist fight between the farmer and the elevator. On a hedge to arrive, the fundamental behind a hedge to arrive is the farmer pays the elevator a 5-cent fee for the elevator to hedge the grain on the farmer's behalf. And for the elevator to make all the margin calls that are out there. And the elevator can do that by either using options or just physically shorting the board. The idea behind an HTA is that there is a perceived inverse relationship between basis and futures. And if at harvest, let's say you've got a basis of 0 and a futures of $5. End users have a price that they want to pay. They don't want to pay more. They like to pay less, but there is a number over which they won't pay because it doesn't work in their feed rations. It's based on their math. That's a number they won't pay above. So as futures prices drop, basis typically goes up. And the idea behind a hedge to arrive is the drop comes in, basis goes up, the farmer comes in and says, I want a price, and so instead of getting option price, he gets a plus 20. So he's made 20 cents a bushel, 35 cents a hundred. But what also happens is the opposite. That for whatever reason, futures go up and basis falls. So when it comes time for the farmer to sell his product, he's not getting 0, he's getting a minus 20. And the farmer's going, whoa, wait a minute here. How come my neighbor gets 35 cents more than me because he got 20 cents increase in futures, He didn't do an HTA. All he did was a basis contract. Put a basis in at option. Board goes up. He says, fine, I'll price it up here. And so now the farmer is one farmer saying, well, I got my 520. The other guy is saying, well, I only got 480. Why did I get 480 and he get 520? Well, you did a hedge to arrive, your futures were fixed. Well, I didn't understand that. And about 16 years ago, somewhere 2008, there was a Superior Court case in Minnesota involving soybeans, in which the judge ruled that the elevator manager was more in tune with the market than the farmer, and that the elevator manager should have advised the farmer what was happening, because the farmer was at a disadvantage, ruled in favor of the farmer. And when an elevator buys on product on an HTA, we sell it. We're not specking on the market. If we've got it bought, we want to sell it so we can ship it out. And from personally, I won't buy HDAs. I won't buy futures firsts. Hedging should be done by a farmer, by a producer, because that is who understands their finances. Because in essence, they're just borrowing money from the elevator. And it just sets up a fight, and I'm not gonna go down that road. I'll do a basis contract where, and the basis contract is the easiest one if the farmer has a problem to get out of. Because if it's basis, it's not priced. And as an elevator, if farmer A comes and says, okay, I've got 10 cars booked with you, and I'm not gonna make it, I'm gonna be short. Well, okay, I can go buy in what he's short to cover. At no cost to him, because I'll just pay the same basis if I can find someone who'll do it. Or the price differential, it could be 2-3 cents a bushel, but it's nothing major. Cash price is cash price. It is, there are a variety of options that farmers have available to them. Talk to the elevator, but the plan is, when do you want to sell it?
And how that kind of relates to the cattle business, you talked about a commodity receipt. We're federally regulated, and we have what we call a custodial account that belongs to the producers. So when you bring your calf to Gulf Coast Livestock Auction, we sell it, we deduct all of the charges, and then that money goes into the custodial account. So when we write you a check, we have no means, we cannot. In other words, if I sell $1 million of cattle on Tuesday, by next Tuesday, I have to have $1 million in there to match the $1 million I sold. Now, if my buyers only paid me $600,000, Eddie Garcia has to take $400,000 and put it in there to make it whole, or risk the possibility of losing my status. So we are constantly audited, we're constantly in that regard. So that is another perk of selling through the auction barns, because when you bring me that calf, you're guaranteed a check. We charge 4% for selling the cattle, and then the other government fees that are in there, like the beef checkoff, the brand inspection, that rounds out to about another 1.5%. So it's about a 5% to sell your cattle with us. And what he was talking about as far as some of the expectations, that's one of my biggest challenges right now, is a producer's expectations. The beautiful thing about the cattle business is that everybody sees cattle differently. I mean, that's what all inherently brings us to the table to raise cattle. But the market sees them as one way, while you may see them as another. So I believe ranching is very, very hard in the aspect that you're always battling Mother Nature, you're battling the input cost. But ranching can be very, very easy. If you get just the right type of cow and you get the right type of bull for our area and not try to blur those lines too much, and just check your fences and check your water and hope for the rain, the return on the cattle business can be very, very, very good right now. But what happens is when people kind of get out of that realm, or they may see what cattle are bringing in Oklahoma, or might be an Angus calf, or just the different kind of cattle that sell in the different areas in which you're trying to sell them. So I would say managing people's expectations is one of my hardest things, because people will throw the kitchen sink at you trying to sell it, saying, well, I saw it brought 420 on your market report and my calf only brought 320. Same thing with a farmer. Well, he didn't really understand maybe how the method worked, but it's just from a quality standpoint. So I can't tell you how many calls that I'll field in that regard, to where people always thought their cattle should have brought more. Like I said, the only people who have ever complained are people with plain cattle, plain and simple, is what I like to say. I've never really got an ass chewing for people who brought me lower livestock. Now, we can compare whether cattle bring more here or more there, but if you bring a quality product, it is so easy to sell right now, and it always has been. And that's where I feel some of the ranchers get complacent, because the cattle are bringing so much money right now, they think they don't have to hustle anymore. They think they don't have to prune their hedges within their herd. I can go into any herd right now and pick out about three, depending on the size of your herd, $3,000, $4,000, $5,000 of an old cow that needs to be slaughtered, a calf that's already too big, that's sucking down its mother, a cow with 2 or 3 bad teats on her, or a cow with horns, just a variety of things. And that's where I want, he said something about earlier about being proactive, where despite as the high price of cattle, and what happens is you can't get a guy to buy a better bull, or you can't get a producer to buy a $5,000 bull to put on his kind of regular cows, because he thinks $5,000 is too much. When you're getting a slaughter credit, you can buy a 2-year-old bull for $5,000, keep them for 5 years, bring them back, and get $2,500 to $4,000 return on them right now. A quality bull, to me, is the cheapest investment, and it's often the most overlooked, that I don't see people take advantage of. You can cut costs in different areas, but if you just get a decent cow, a good South Texas cow, a little bit of ear, and put a good Angus, Hereford, Charolais type of bull that's really gonna put the engine with the capacity of a South Texas cow, I think you can really make a difference in the market.
That's a good, Eddie makes a good point, man. That's one area, a good bull, that's 50% of your herd right there, man.
Yes,
So,
sir.
you know, may not be able to afford a bunch of these high-priced heifers, but you can sure afford a pretty good bull, you know. Let me see if I can tie back into what my buddy Elkins said over there. I have not seen too many hedge to arrive contracts. Producers use those, to be honest with you. Just not real common. You know, I don't know if that's something that's gonna get more common or not. All I can tell you is this, you know, the simpler you keep your marketing plan, you know, and the more basic you can keep it, and make sure that you can articulate it. It is great to have gentlemen out there like John Miller. I think a lot of John. He's good at what he does. But unless you can explain it to your lender when you walk in and talk to him what the plan is, that's probably not gonna help you a lot. I mean, I take a lot of comfort in knowing that a producer's working with a guy like John, but you know, I like it when that producer can come in and articulate what his plan is and what he's doing. And quite honestly, and even John said, I think he said that yesterday, the simpler the better. If you're not at least doing something with puts and calls, you know, you're really leaving probably dollars and cents on the table, particularly nowadays, you know, with such the volatility that we have in the markets. You know, and as far as a lender, if you come to me and you want to make that part of your operating loan, or a separate loan to do that, if you can come in and articulate and lay out a game plan for me and what it is you want to do, then I'm probably going to be okay with that. I'm probably going to be delighted. You know, it's better than just running naked through the season, you know, like a lot of us are right now, I know.
When the tide goes out, you can see what everybody's
We're
wearing.
gonna see everybody's wearing here pretty soon.
Some be
Good-
wearing
good way-
skivvies, and wearing nothing at all.
That's right, good way to put it, Eddie.
If you think about it, a futures contract is 5,000 bushels. That's 280,000 pounds of corn, 280,000 pounds of Milo, or 2.8 cars, as we like to call them. So as a producer, dry land, I'll stay away from irrigated, but as a producer, you're looking about one contract for every 100 acres that you've got planted. And so if you've got, 5,000 acres or 500 acres planted of Milo, you're looking at 5 contracts. Or am I off? It's 1,000 acres. 2.8 times 1,000.
Mhm. Well, whatever it is.
Yeah, but the idea is, it's for us down here, October, November, December, January of December of 24, January of 25, when Ocno D's of 25 gets here, producers should be looking at these futures. And if these futures is $5, that's when you need to get puts or just take a position. Because that $5 area is,
Good place to be.
yeah. And, again, you have to understand, you have to look and see, well, what's going on? Where are we stocks wise? Now, I'm not saying if June, July, August right now, or if the nearby months are trading at 485 and, these futures is trading in the $4, we've got a problem somewhere. There's something coming on.
At those prices, are you referring to sorghum or corn?
Corn is
Well,
I'm
that's the
talking
market.
Milo for right now,
But it's based off the corn market.
but Milo's based off of corn values. But still, what's gonna affect corn is more, if your corn is not going to Azteca, then your corn is going to go to Mexico. Your corn is not gonna move north into Gonzales because of all of the corn that's grown, Corpus north. So the corn market here is very limited. It's either Azteca contracts or it's going to Mexico. And the what you're gonna see change is basis more for corn. And I think the basis for corn will change faster and in larger increments than Milo will.
And as far as on the hedging, with the issues that have been discussed about the market at harvest, how do you see the correlation between, because I'm assuming for the Milo, you're having to buy corn futures, or is
Yeah,
there?
your Milo is hedged through corn futures, yes.
Yes. So with the difference in the basis and potential issues that we're having, are you like you were mentioning one contract per 100 acres or whatever it is.
What is your
it
corn
one for
yield?
one, or are we talking different numbers?
Well, most Milo's gonna grow, I mean, you're gonna get around 3,000 pounds to acre in a yield on dry land Milo. Irrigated Milo, and again, irrigation becomes a problem, but if you're cutting 5,000 pounds, you're not quite, you need 560,000 pounds for 2 contracts. So it's sort of like a 3-to-2 relationship between corn acres and contracts for corn.
And that covers the spread and the basis.
Well, what that does is that covers the quantity, the volume of product that you have. Basis, there is no protection for basis. There's no way to hedge basis. But basis typically changes less than futures, and it's less volatile than futures.
Generally speaking, it's fairly predictable. I mean, for the most part.
And again,
These guys have records on all that.
For different times of the years.
Yep.
you know, and the problem that we have is this year, well, for the last 8 years, from 1986 through 2007, the Valley's Milo crop went to Mexico. No ifs, no ands, no buts. It was going to Mexico. Because Corpus market was very thin. China was not a major player, and those that were importing Milo were Venezuela, I think Egypt, Italy, Spain, and that was pretty much, Japan was buying some, but most of that was coming out of Houston. But it is, after 2007, ADM took over Corpus Christi Public. China, ADM slowly began being a market, but elevators had problems in that we would buy from a farmer, we'd sell to ADM, ADM wouldn't have a boat. And we'd be sitting with and more so in the Corpus area, elevators would be sitting with full bins, farmers are still harvesting, and ADM is saying, well, we're unable to receive. And then you run into a cash flow problem, because ADM, even though you've got a contract with ADM for June, July, August delivery, and it's September, and ADM still hasn't received anything, ADM is not gonna pay you. They're gonna say, well, you still got the grain, you haven't delivered it. Well, let us deliver it. And they said, well, we can't. And despite the industry trying to do things, it still works out that way. If ADM can't receive it, they don't take it, it sits in the country. China stepped in, and everything started flowing into Corpus. Prices on Milo kept going up, stuff kept going in. All of the other marketplaces said, well, if that's what y'all are doing, we'll shift to corn. Or we'll shift to Milo from other countries, Australia, Argentina. But the issue with corn here, it's all gonna go through Mexico, and the price point is going to be, what does competition cost us? Corn is gonna come out of the Midwest on a 100 car UP train or a 110 car BN shuttle. They're gonna go into Monterey, Current bids delivered Monterey are 198 over the 7. That's what's being offered. You back those numbers out, you back freight off of it, you back what it costs to cross the bridge, you back out what the elevator is gonna charge for handling and its paperwork to export it, and then you get a bid to the farmer. That's how we're gonna calculate corn values, and the corn value is going to determine the milo value. Because there's not a nutritionist who is advising a feedlot, be it poultry, be it pig, be it cattle, be it a feed manufacturer. If milo is not 10% less than corn, then they're not gonna want it in their rations. They're gonna put corn in their rations. And so you're looking at a minimum 10% price differential between the two. So if you've got a corn bid delivered Progresso of $8, 100, then you'd be looking at $7.20 at best delivered Progresso for milo.
That sounds more optimistic, yes.
Well, I just threw those numbers out because if you do the math on what September closed at, you get really depressed. And especially when you say, that's a number delivered Progresso. That's not a number
For the farmer.
to the farmer in Santa Rosa or
Right.
San Benito or McCook or Hargill or Willamar or any other place. Because when you think about it, where are our elevators now? Your operation is where? Your operation is Rio Hondo, so out of Rio Hondo, you've got the Port of Harlingen at Viterra's place. But it's iffy if that place is gonna run this year. So where is your next closest? If you're Rio Hondo, you can go north to Willamar. I don't think the elevators in Sebastian are running. I don't think the elevators in Raymondville are running. Lyford is out. So now that leaves you San Benito. You can drop down and go to San Benito. Or you can continue west and, you can continue west and you go to 800 and you've got an elevator on the east side of 800. You can go west of San Benito and hit Rangerville. You've got a small place there. Or you go to Progresso. But again, the question becomes, how much grain can Progresso hold if Mexico isn't really in the market?
Is there so many fewer elevators because the elevator business is tough, or is it just so many fewer producers?
Both. The biggest thing is age.
Infrastructure or the person?
Well, age of the elevators. Both. I mean, they're in the country,
I know that.
in the country, there have been no new elevators built.
Yeah, it's like cell barns went from 120 down to 70.
Yeah.
In the state of Texas.
Same with cotton gins. You know, I mean, there used to be, you know, when I grew up in Harlingen, I think there were at least 7 gins working around Harlingen.
In 1992, there were 32 gins in the valley, because I had to come down here and deliver a research survey to every one of them. Now it's 5.
Maybe. You know,
So,
Hargill
I
shut
mean,
down.
and, you know,
Yeah.
part of it is regulation and cost. The insurance on my facility used to be a very low but still ugly 5-figure number. My insurance cost today is a 5-figure number every month. And, you know, when you sit down and say, well, all right, well, just increase your charges.
And they're gonna take it to the next elevator.
You know, I'm sorry, you know, Farmer Bob, when I tell him, yeah, my in and outs went from 35 cents a hundred to 50 cents a hundred. Bob said, well, I don't like you anymore, you're stealing from me. And it's, well, I'm sorry, but you know, my costs have gone up, and the farmer rightfully says, but so have mine. My tractor now costs $500,000. My combine cost almost $1 million. And